So if you've been trading for a while, you will get to understand that in trading, there are different strategies of trading, and this strategy suits one, your style of trading, and also the kind of personality and the kind of person you are. They only have three types of trading. You have the day trading, the scalping, and swing trading. And the swing trading is where you talk about the position trading, where you want to hold trades for as long as 2 months, 3 months, 5 months, etc. While day trading is when you open a position today and allow it to run for only 24 hours. By that I mean get to, let's say you open a position by 8 a.m. in the morning, right? London open, you trade and you open a position, and by 6 p.m. in the evening you close that position. That is day trading. While scalping is when you are trading intraday. By that I mean trading within 5 minutes horizon. Like that's why you see people going to the 5-minute time frame, 15-minute time frame, and in those time frame a candle represents that time frame. Let's say you're in 5-minute time frame. One candle, it will take 5 minutes for one candle to form. And let's say you're a scalper, you don't need to be going to 4-hour time frame. Your job is to wait for a minute. Let's say you're in 5 minutes or a minute time frame as a scalper. You're waiting for 1 minute candle to form to get your buyers on what to trade. Let's say after that candle forms, you open that position, and you're not allowing that position to run for more than 15 minutes or less. You're just holding, let's say, 5 minutes. You open a position and you allow it to run, because now you already know the minutes it will take for one candle to form. By doing that, you've already accepted that you won't hold this position for longer than so minutes. You open that position, in 5 minutes you close it, then you look for another entry, you close. You can be trading every 15 minutes or every 5 minutes or every minute. That is scalping. While day trading is when you wake up in the morning, you analyze your charts, and using the daily time frame, then you scale down to the 4-hour time frame or the 30-minute time frame or the 1-hour time frame, open a position, put your stop loss, and allow it to run. While scalping, on the other hand, is when you analyze a position from the higher time frame, let's say the 1-month time frame or the 1-week time frame. You analyze the market, because you already know that it will take a week for 1 week candle to form. You already know that yourself as a swing trader or as a position trader. Then you analyze your chart and you say, okay, before you enter the position, you want to wait for 1 week candle to form. This is where the waiting happens. You wait for 1 week candle to form as your formation. Then you scale down to the daily time frame where you want to pick your entries. When you go to the daily time frame, you look for chart patterns, key support and resistance, minor support and resistance, those daily time frames. And your entries, after you must have mapped these things, and let's say you're trading EU, you've seen your minor support and resistance on the daily time frame, because you already have the bigger support and resistance on the weekly time frame. You go to the daily time frame, you map out those minor support and resistance that you confirmed using the daily candle, because it will take a day for one candle to form in a daily time frame. Once you've analyzed that, you've understood that, you scale down to the 4-hour time frame where you want to pick your entries. 4-hour time frame is where you want to see the confirmation of, okay, this market is going towards this direction. Then you trade, and once you open that position, you allow it to run for as long as a week, depending on how long you hold. Personally, I hold trades for up to 2 months and above. I've not held for 6 months before, but I've held for 2 months, 3 months, and 4 months. When you open that position, you now start to monitor your position using the daily time frame. You no longer go to the weekly time frame. Use the daily time frame to monitor your trades. That's what swing trading, day trading, and scalping is all about. It's more of understanding your personality, the kind of person you are. One gives you the chance to do other things, that's swing and position trading. Day trading gives you the chance to not always be in front of your screen, because you've already analyzed your chart, you know when to close the market. While scalping is when you are stuck on your screen. You're always monitoring the chart because you don't have no option. You dare not leave your chart. That's why scalpers tend to make less money, because less is more. That you're trading every day doesn't mean you make money. You only make money from scalping if you are very good at scalping. And as a newbie, you can never be good at scalping. The only thing you can do as a newbie is just to take signals or trade with your mentor or be in a signal group, because it takes time. It takes years of analyzing the market for you to be a very good scalper. That's what people don't understand. You can do well in your first year of trading as a day trader and as a swing trader, but scalping takes time, because as a scalper, I want to scalp. I have already analyzed the market as a swing and position trader. I go to the weekly time frame. I've already seen the major support and resistance. I go to the daily time frame. I map out minor support and resistance, which is where I'm going to be trading in. Then I scale to the 4-hour time frame. I look for those turning points. All I have to do is just to go to 5-minute time frame and enter there and hold trade for as long as, let's say, 15 minutes, and I close, because I've already understood the general flow of the market. So this is why swing trading is best suited for people coming into the Forex market for the first time. You want to use it to understand the market structure. And the only way you can get to understand the market structure is when you zoom out. When you leave the screen, when you just zoom out to the higher time frame, you want to see the bigger picture. From the bird's eye view, it is just like a sniper. you want to aim, you want to know where your target is going, then you scale down to those time frames where you want to pick your entry. So within this, I've been able to explain what goes on between scalping, day trading, and swing trading. That's one of the reasons why I always recommend the Trading Edge program. It is the best at the moment. It is the best selling program and the best for anybody, be it a beginner, an advanced trader, an amateur, or someone that wants to switch from scalping and day trading to swing trading. You can look to get it. Click on the link in bio and you get access to the program, or you can send a DM across to us. You'll be invited to the program. Do well to like, comment, and share. And also, if you have anything you feel you want to ask about trading, drop it on the comment section and I'll get access and also give you the reply you want. Cheers.